What is going on, team, and welcome back to yet another video. I've been a little inactive recently, but it is because I'm traveling, so please bear with me. In this video, I want to break down the two positions that I took with the entire team last week because I feel like a lot of you could learn a lot from just watching my trade breakdowns and seeing my thought process and everything in between. I've said this 1,000 times before, and I'll say it again. Trade breakdowns are some of the best information that you can find on YouTube in terms of trading. Trading strategies, trading this and that is one thing, but breaking down exactly how I took these positions and my thought process is what's going to help you. So without further ado, let's jump on to the first position of the week. So here we are on Wednesday. This was last week. Now I didn't trade Monday or Tuesday. Monday I rarely trade because if we have no economic data on a Monday, it is typically not something I'm interested in. The market is typically very flat for obvious reasons, and I just avoid it altogether if there's no news on a Monday. Tuesday, there simply was not anything that I wanted to place. However, Wednesday came around and I found one of my models playing out to the absolute T, and I had to take action. So here we are. Again, Wednesday, 9:45 down here is when we hit the 4-hour inefficiency that we have here. Now, we've hit it a couple times before. As you can see, we have one test here, another one here, and the third one here. This is something I was very interested in. Again, we had a 4-hour inefficiency up here as well. So moving from imbalance into another imbalance is sort of the thought process that I have coming into Wednesday. Remember, all of my weekly outlooks, daily outlooks, and all these different things are given to the members inside of the Discord, so they had an understanding of what was going on. So going back here to a 1-minute time frame, as you can see, this is when we hit that 4-hour imbalance and we got a large reaction off of it. Now, not only that, but we also had an SMT at the external low down here with the S&P 500, meaning that the S&P 500 had swept this low and the NASDAQ had obviously not swept the low. Now, why do I know that this SMT was going to hold? Obviously, I don't know, but I had some things telling me that this would probably work. And the reason for that is because of the displacement we got after the SMT. So we had a large move down, we got the SMT divergence, we hit the 4-hour imbalance, and then we got a large move to the upside. After that large move to the upside, I'm now interested in taking long positions, or at least starting to look for them. So we had external range liquidity up here, and I was already thinking that this was going to be a market maker buy model. Obviously, this being the buy side of the curve and this being the sell side of the curve, we had engineered equal highs here, which we had swept, and I was interested in taking a position right around this pullback. Now, again, with market maker models, you get a first stage distribution. I was anticipating a second stage distribution right here, and then obviously a move higher to take out the external range liquidity and finish off the market maker buy model. So again, I was anticipating that this right here was going to be a second stage distribution, and I entered off of the optimal trade entry, drawing it from the most recent swing low off of the first stage distribution to the most recent swing high, entering off of the 0.618, having my stop a little bit above the low here, targeting the external range liquidity high right there. If I go ahead and play it out, you'll be able to see how beautifully this trade ended up working. So absolutely zero drawdown. It was just a picture perfect trade. Now, I did actually end up taking it off a little bit before, so right around here is when I took the position off. And the reason for that is because the S&P did end up sweeping the high before the NASDAQ, creating a bearish SMT. And just to be safe, I took my position off as soon as that SMT happened. This is something that I always recommend people, especially if they have a hard time taking their profits. Whenever you have two correlated assets and an SMT divergence is present, that is generally a good rule of thumb to take your position off. So that is exactly what I did just to be safe. And as you can see, it actually ended up hitting external and invalidating that bearish SMT, but I was just not willing to put on that risk. So an absolutely perfect start to the week here. We made about 2.9% off of this one trading position. Let's jump on to the next day, which is exactly when I took my next position. I did call out a few other trades, but we'll take a look at the one that I actually placed myself. Here we are. Again, this is the next day. So that is on Thursday. And what I had seen was we had an SMT divergence at this low with the S&P 500. And again, if you didn't hear it last time, that means the S&P 500 swept the low. The NASDAQ obviously failed to sweep that low. Now, I'm going to play it back a little bit here. Because this is right when I got filled. I was targeting this swing high here. I could have gotten for the external high up here, but I just wasn't feeling it this day. We started to see sort of a healthy uptrending market, making higher highs, higher highs, higher highs, and higher lows. So looked like a very healthy uptrending market after that SMT divergence was established. Not only that, but on a 5-minute time frame, we ended up violating this 5-minute bearish imbalance. Now, this right here tells me a lot about the order flow. We're currently holding this bullish SMT, as you can see, that is holding beautifully. Not only that, but we're also holding this 5-minute imbalance right here. So currently we're holding a bullish SMT, we're also holding a bullish imbalance, and we are right after holding the bullish imbalance, violating a bearish one. So that automatically tells me that the order flow of the market is bullish and longs should be preferred. So again, I was looking to capitalize off of the optimal trade entry, drawing it from this consolidation low to the most recent swing high, and I was going to aim for this internal range liquidity high right here. So my entry was the 0.618. My stop was a tiny bit above the low right there. And my target was, again, that internal range swing high. Now, I came very close to getting stopped out here, but I was still very confident in the position. Now, why am I able to remain confident in a position that's going against me? Well, that's because I trust my analysis, okay? So what ended up happening here was the S&P 500 swept this low down here, and the NASDAQ obviously failed to sweep that low. That right there is a bullish SMT. If we take a look at the prior bullish SMT, what happened to that? Well, obviously that held very nicely. So I can only anticipate that the next bullish SMT is also going to hold, because again, we established that the order flow is bullish. And if the order flow is bullish, well, then the bullish SMT should also hold. Not only that, but if I draw the equilibrium from this swing low to this swing high, right there, you can see that we had already hit equilibrium of the range. So currently we have a bullish SMT and we have hit or rebalanced towards equilibrium of the current trading range. So I saw absolutely no reason for price coming down further, which is why I was able to remain confident in this position. So again, entry was 0.618. And if I play it out here, you'll be able to see what happens. Absolutely beautiful. And we ended up smash and take profit for almost a 3% gain. So overall, an amazing trading week. Only traded 2 times this week. I only had 2 positions on this week. A lot of people will say that's too little for a day trader, and I think that they are full of nonsense, because again, my job is to manage risk and figure out when the probabilities are in my favor. With the way that I trade and my trading system, I am not able to trade A+ conditions every single day. So a big part of my trading is being able to recognize good days and bad days. Monday and Tuesday were bad days. I did not place a trade. Wednesday and Thursday were good days. I did place trades. Friday was also a bad day for my system. That left me with 2 trading days, and those were the only days where I traded, and obviously that ended up paying off. That is why I preach patience, okay? Patience pays. It's not for fun. Once you learn to be patient, once you learn to wait for exactly what you want to see, it becomes a lot more simple to trade. If I were to ask you right now, how many trades do you think you would win, or how big of a strike rate do you think you would have if you had the absolute discipline to wait for an AAA plus setup every single time? A lot of you would probably say, well, I probably would never lose, right? Obviously you would, but your strike rate would be a lot higher than it probably is right now, which is why it's confusing to me why people are not focusing on their discipline, because that will allow them to trade comfortably, have a way higher strike rate, and just way higher returns in general. It all comes down to discipline. Overall, an amazing week with the entire team, and I hope you all learned something from this trade breakdown. If you enjoy these trade breakdowns, let me know in the comment section below. Without further ado, I'll see you in my next video.